GameStop's performance over the last 2 years baffled markets, of course. It behaved at times irrationally, seemingly at the whims of social media-centric investors, and bucked traditional expectations with Ryan Cohen at the helm. So the question is, now that he's taken over entirely, is there more GameStop stock tumult on the horizon? What does it reflect as well about the retail investing environment? Katy Kaminski is with us now, Chief Research Strategist at AlphaSimplex. And she reminded us all back in 2021 that GameStop's wild performance is a reminder that the behavior of investors is a powerful force in markets. She's here with us in studio today. Katy, thanks for being here. A powerful force indeed, although, as I said, that behavior seems to now have shifted, as is evidenced by the drop in the stock this morning.
Well, I think it's so fascinating because we saw one of the biggest moves for particularly hedge funds back during this GameStop event, and it feels as if from the institutional side, you're just not seeing as much fervor. And so I think you really put it very clearly that, back then during COVID, maybe, everyone's on the screen, everyone's thinking about it. Maybe everyone's back in the office. They're, not as focused on some of the key themes that they were thinking about back in COVID. I mean, I know we're seeing less of that fervor. It's much more about a Fed fervor these days, perhaps, than GameStop.
And so where does rationality re-ensue in the markets then, as people are not in front of the screens as much as they were previously and perhaps being a little bit more judicious about the investments that they're making?
Well, I think the challenge is that irrationality, that fervor, that optimism, it moves around, right? And so what we've been seeing is most of the focus right now is on a Fed pause, fear of missing out. What am I missing in the equity markets if we actually see less tight conditions? So back in COVID, maybe we were all focused on which of these companies are the next big thing to follow, or where is there too much shorting pressure in GameStop. But right now, it really feels like people are just trying not to miss out because of what you've seen. I mean, look at the NASDAQ. It's gone up so much. And now even Russell in the last week. So it feels like there's a little bit of FOMO. And that fervor, that optimism is much more about not missing out on general equity market performance this year.
Yeah, that's a really interesting point. You're not the first person lately to have brought up the FOMO trade, or some people are calling a melt up. That's what we've been talking about. But that's a really interesting point, that the FOMO trade has been transferred from these little individual stories to the overall market. So I guess then the question becomes, how long can that sustain a rally if it's just everybody saying, I don't want to miss this?
Yes. So everybody has been sitting around all year kind of saying, like, when it's going to be okay. Let's wait. Let's see. Let's wait. And what we've seen now is, now that there's an indication there might be a Fed pause, everyone's saying, oh, everything's going to be better. What I worry about is that the market is often much more excited and optimistic in a much shorter period of time than what we see, because we're still seeing some negative signals in, say, fixed income. So if you think about where we are right now in terms of technical signals, equity signals are just very strong on the long side. But we're still seeing short signals in commodities until about a week ago, and also in fixed income. So the picture isn't really that clear. But if we don't have as much pressure for the Fed, then, hey, maybe it looks a little better, and everyone's just going to hope that inflation will just come back down and everything will be nice and rosy again, I guess.
Is the Fed still pressuring the markets, or is it the other way around now? Is the market pressuring the Fed? Because the Fed doesn't want to surprise the markets overly, but at the same time, the Fed, even in its dual mandate, it's seeing employment hold up relatively well right now and still combating inflation right now.
I would actually say it looks to me more like the market is pressuring the Fed in saying that, if you think about it, the Bank of Canada comes out today being stronger. And basically the market is basically saying, like, everything is looking good, just as long as you keep your pause. And that to me feels a little bit more like a pressure, because if they don't, that's where the people will be worried. Let's say that they come out and say, look, we decided to hike. People will be upset, and then they'll start hoping there's a pause after that, I guess, would probably be my guess.
Hold that thought. We're going to talk more about this. Katy, stay with us.